Hi, this is Andy from Rookie Investor, and in this video we will analyze how to read a cash flow statement. A cash flow statement is a financial statement that summarizes the movement of cash and cash equivalents that come in and go out of the company. It is one of the three core parts to look for in a financial statement, with the other two to be the balance sheet and the income statement, which we have analyzed in different videos. Prior to investing in a company, it is extremely important to go over their cash flow as it shows you the financial health, liquidity, and ability of the company to pay all its debts. Allow me to start by saying that you can access any cash flow statement of a publicly listed company. Many websites, aside from the company's own website, will provide the information. The easiest way to access a cash flow statement of a company is either through Yahoo Finance. Once on the company's page, click Financials, then Cash Flow, or TradingView, which again you click Financials, Statements, and Cash Flow Statement. There are a plethora of other investment related websites where you can get this info, and also you can visit the website of the company and find them there. All the companies post their quarterly financial statements and of course their 10K forms, which cash flow statement is a part of. Anyhow, for this video we will use TradingView as it provides detailed information about all the listed companies. In addition, we will use Amazon's cash flow statement. There are three main components to be found on every cash flow statement. Those are cash flow from operating activities, which is the amount of cash flow the business generates from daily operations, such as funds received from the sale of goods and services, interest payments, income tax payments, rent payments, and so on. Second, cash flow from investing activities, which is the amount of cash flow the business generates from investments such as buying or selling assets for the company, loans made to vendors or received from customers, payments related to mergers and acquisitions, and so on. Typically, the number in this section is negative as the company has to spend money to invest on itself or acquire other companies. And last, cash flow from financing activities, which is the amount of cash flow the business generates from taking new debt or raising new debt, as well as paying dividends and buy back stock. Typically, this number is negative as well. However, you will notice that in Amazon's case, this number is positive sometimes, like in 2017 and 2021, which is normal. That usually happens if the company is taking on debt or doing dilution to raise money. Another key component to take note is the free cash flow, which is the cash left after a company pays for its operating expenses and capital expenditure. This metric is very important and it serves as a measure of profitability, thus is a key indicator of the financial health of a company. Now that we covered the main components on the cash flow statement, let's dive a bit more into it and check the subcategories. Starting with the cash flow from operating activities, the first section we see is net income. As you may recall from covering the income statement financial report, net income is the money the company makes after deducting all the costs and the taxes. Next is depreciation and amortization. Depreciation refers to the reduction in value of a tangible asset like inventory and equipment, and amortization refers to the reduction in value of an intangible asset such as goodwill, licenses, trademarks, and so on. This is not a cash expense, meaning the company does not have to pay the amount in cash, but a loss in physical value. Still, it has to be accounted for that it has been reported on this section. Deferred taxes represent the company's negative or positive amount of tax owed. Changes in working capital tracks the net change in operating assets and operating liabilities across a specific period. To calculate the working capital, you need to subtract current operating liabilities from current operation assets. Working capital equals current operational assets minus current operational liabilities. A positive working capital shows that your business has sufficient liquid assets to pay off immediate debts, while a negative working capital shows that the company would struggle to pay immediate debts if restricted only to current assets. You can expand changes in the working capital and look at more categories such as account receivables, accounts payable, accrued expenses, inventory, and other assets. But the number to focus more here is the changes in the working capital as a whole. To summarize the cash from operating activities, you add the funds from operations with the changes in the working capital and you get your cash from operating activities. In Amazon's case, this was 46.33 billion for 2021. Moving to cash from investing activities, as mentioned earlier, is the amount of cash flow the business generates from investments. There are three subcategories in this section worth focusing on. The first one is the cash from purchases or sale of business, which reveals the cash received from the disposal of property, plant or equipment, business and or other subsidiaries, as well as the purchase of acquisition of a business. If we expand, we will see two categories as well. Usually that number for most businesses is negative. However, in Amazon's case it's positive as the company is raising quite the funds from the sale of fixed assets while it is spending quite a bit on buying new companies. The next subcategory is cash from purchase or sale of investments. Again, there are two categories in the list. One is the purchase and one is the sales. A company like Amazon is heavily invested in long and short-term investments, as you can see from the figure of money that is on the report, both on the purchase and the sale side. The third subcategory is the capital expenditures, which is key metric on the cash flow. Capital expenditures measure the funds used by a company to acquire, upgrade, and maintain physical assets such as property, plants, buildings, technology, or equipment. This number is important as this shows how much money the company needs to spend to maintain its current business. The last part of the cash flow statement is the cash from financing activities. These activities are broken down to four subcategories. The issuance of retirement of stock, which represents the net change in the carrying value of common and preferred stock. The issuance or retirement of debt, that represents the net change in the total debt of the company. The total cash of dividends that were paid out, keep in mind that not all companies pay dividends. And last, other financing cash flow items that can generate cash for the company. Two parts to focus here. First, the issuance of debt. If you click there, you will get a new category, the issuance of long-term debt. If that number is negative, which is for quite a few years in the case of Amazon, means that the company is paying off its long-term debts, spending money towards that and reducing them. If the number is positive, means that the company is adding more debts, which as you can see it happened in 2021 for Amazon. If you click further, you can see how much debt Amazon added for the year of 2021 and how much the company spent towards reducing its debts. Second is the issuance of stock. In the case of Amazon, the numbers here are zero because Amazon didn't issue any stock for the past few years, so let's use another income statement to better explain why this category is important. Let's use Twitter. Twitter over the last few years has generated cash from selling common and preferred stock. For those who are unaware, the main difference between preferred and common stock is that preferred stock gives no voting rights to shareholders, while common stock does. Also, preferred shareholders have priority over a company's income, meaning they are paid dividends before common shareholders. When a company sells stock to raise money, they dilute the company's ownership, which has negative implications for a simple reason. A company's shareholders are its owners, and anything that decreases an investor level of ownership also decreases the value of the investor's holdings. Dilution also reduces the company's earnings per share, which often depress stock prices in the market. Now, as you can see, in Twitter's case, the last 2 years, the company is spending more money to buy back stock, which makes the stock more appealing to the shareholders. Now let's get back to Amazon cash flow statement and focus on the free cash flow, which is the cash left over after the company pays for its operating expenses and capital expenditure. As mentioned earlier, this metric is very important and it serves as a measure of profitability. Thus, it is a key indicator of the financial health of the company. The way this is calculated is the following. We take the cash from operating activities, which is 46.33 billion, and we subtract the capital expenditure, 61.05 billion in Amazon's statement. The number we get is a negative 14.73 billion. A negative free cash flow indicates an inability to generate enough cash to support the business. Now, in the majority of cases, this is a negative sign. However, that alone cannot determine if a company is doing good or bad. In the case of Amazon, the net income of the company is growing over the years, and the company is investing heavily on itself. So having a negative free cash flow for a year is not such a red flag. Now that we analyzed all the categories and subcategories of a cash flow statement, and we know what each one of them represent, let's talk about the key things that you want to see in them. First, the cash from operating activities. Over the years, we want to see that number growing. This shows that the company's operations over the years generate more cash, which means their business is growing. In the case of Amazon, that happened with an exception of 2021. And if you recall, that had a negative impact on the company's stock as investors pay significant importance on cash from operating activities. The same attention is given in the free cash flow, which once more we want to see a growing number over the years and definitely be on the positive side. That means that the company will be able to return more cash to its shareholders by investing more back to the business or buying back its own stock. Once more, Amazon was having growing free cash flows over the years, with the exception of 2021, and that, as we said, had quite a blow on their stock price. Last, it's always a great idea to pay attention to the capital expenditures, as these are the costs associated with maintaining existing property and equipment. Aside from the three key points mentioned, digging more to the subcategories can explain why some of the numbers make no sense and red flags come up. To apply all we learned, we will use Bed Bath & Beyond as an example. The cash from operating activities has been on a decline since 2016, meaning the company is generating less cash from its activities. Their free cash flow has been shrinking year over year as well, and in 2021 it turned negative. The issue here is that their net income is negative as well, and shrinking together it's extremely bad news for the company. Last, looking at the capital expenditure is rising despite the fact that the company is generating less cash from its operating activities. In fact, it's up to $354 million in 2021 from the $183 million in 2020. This is a terrible sign for the future of the company. Overall, the future of Bed Bath & Beyond looks grim with these numbers. But keep in mind that in order to determine the financial stability of a company, you need to look for the key points in the entire financial statement, which is broken down to three parts: income statement, balance sheet, and cash flow. We have created videos for all. You can find them on the description or on the video cards. I hope that this video really helped you familiarize yourself with the cash flow statement and all the key points to look at. If it did, please hit the like button, and if you're interested in more content, make sure you subscribe.